there's a lot of those people out there, I think, Mike, that are sitting on mounds of equity. And, for every person like that who's got tons of options and can probably do something that would really upgrade their, neighborhood or lifestyle, or it fit better. There's those people that don't know because they haven't had the conversation. And then there's people that bought in 2022. They've got $9,000 in equity and they want to go buy triple the house, and they're just disillusional in that way. So I think, like, the moral of the story is you don't know until you talk to somebody.
Recently, we have hired the refinance boom, which continues with the latest week posting 184% week on week, or I'm sorry, 184% year on year. Let's get that right. But what we're going to talk about in this episode is actually purchase applications being up week on week for 7 weeks in a row, folks. That is a trend. I got to ask Matt, the mortgage guy, what the heck is going on? We're supposed to be in the slow season. Why are mortgage purchase applications up so consistently? Again, 7 weeks in a row. Matt, what say you?
Yeah, I mean, I think that when you think about the consumer, they've said for a long time, we're waiting for interest rates to go down. And they weren't lying to a certain extent, right? Interest rates came down and they jumped in because there is so much kind of on the fence sideline demand that it doesn't take a lot of interest rate movement or something to happen to where, a small fraction of those come off. And so it creates something like this, which, for anybody listening, to have week on week increase in purchase applications happening now is the
Unusual.
thing is the thing that's weird.
Wild.
If that happens in April and May, you're like, oh yeah, it's the buying season. Like, more and more people are coming out to buy. But when that's happening August, September, October is when you're like, it's supposed to be steadily declining and it's on the increase. And I think that even though it may feel in some markets like a lot of people have pressed pause, enough people had said, sub 7 looks good. Wow, 6.5. I like that. 6.25. And so more and more as rates declined have started to, peek their head out and poke around and get themselves pre-approved. And so it doesn't surprise me that those applications are up. What I'll be interested to see is how many closed transactions it turns into, because
purchase application frankly means very little. It doesn't mean a purchase. It doesn't mean even an offer. It's just somebody trying to figure out where their kind of their approval and their comfort level is. Like, hey, when I shop here, am I comfortable with that payment? A purchase application does not mean an offer and does not mean a purchase. I do want to make that clear.
Yeah, but it is a leading indicator,
Oh, for sure.
Yeah, we can look at that and say that, people are much more excited about housing at 6.25 than they were at 7.25. And so,
and let's be clear. Let's be clear. When I hear from people who are writing offers, either investment or ORaaT, nobody I'm communicating with is talking about a 6. They're all getting stuff in the 5s.
Yeah.
Some down to the mid 5s with a point or a point and a half. So I've always known or always told folks that sub 6 is going to be an interesting mortgage rate because I think it pulls marginal demand. The other thing I think that's really interesting, again, 7 weeks in a row of purchase apps growing week on week is clearly a trend. The other thing I will tell you that I'm hearing more and more, which is kind of an odd thing, is more and more people are saying, I'm going to wait for the Fed to cut. So we have purchase apps going up undeniably, and we have more people saying, I'm waiting for the Fed. My biggest concern is the spring selling season. Post 100 basis point in cuts into that, the hot season after the election. It could get wild.
Yeah. And it's interesting to look at it and I could have different clients that are buying in the same market with totally different experiences, because one's looking at specific neighborhood and it's, $500,000 to $600,000 price point. It's super hot. They put in 7 offers, didn't get anything accepted. Somebody else who's looking at a different price point maybe and is choosing between 2 houses that have both been on the market for 60 and 78 days, trying to decide, do they go 100,000 below list or Do they ask for, 50,000 in concessions and 50,000 off the price? And so that's another interesting dynamic. But what I think is a great time for buyers. Like there's this dynamic that won't happen very often is the rates are lower, so people are excited about that. But also, inventory's not moving that fast, and especially if it's inventory with any hair on it or any issues with it. Because as I think, and I'm trying to just like in my own head think about stuff that's in contract, stuff that we've recently closed, and I'm thinking about it, Mike, like $695,000 purchase. We're going to end up getting 31,000 in credit, and the
Wow.
buyer, there's tons of different things you can do with that. You can pay all the closing costs. You can buy the rate. To your point, people are buying it down, and now that they've seen a payment that they like and can afford, they're like, well, shoot, let's just buy it to 5.6 and
Yeah.
leave it alone. I don't need to worry about what the Fed does.
Yeah. Set it and forget it, right?
Yeah,
Just leave
because
it alone.
before it was like, oh my gosh, like how do we structure this? A 1.0 buy down, or do we do a 2.1 buy down? And their start rate's 7.5, so they might be 6.5 for a year. Now, do you want the 6.25? Do you want to buy it down to 5.75 or 5.99? Those are the
Yeah.
conversations, which frankly are a great thing for buyers. But like, me and you have said on this channel at nauseum, like this
Mm.
stuff doesn't last forever. if the spring buying season brings out a lot more buyers and not a lot more sellers, which is the most likely case, it's going to be even tougher for buyers. And then in
Yeah.
April, they're gonna be like, well, gosh, I guess getting off the fence at the same time everyone else gets off the fence isn't the best play.
No, I couldn't agree more. That's why I keep trying to highlight, folks, we're still in a buyer's market. Certainly not everywhere, but certainly in most markets. Certainly anything on the market 30 days or greater in most markets. It's time for disrespectful offers. It's time to follow up. It's time to get those $36,000 in credits where you can, move the money around as you see fit, working with a professional like yourself, but best allocate those dollars or resources. The last thing I want to talk about again, because you're working on this every day, right? Dozens and dozens of applications and buyers every week, lots of conversations, is I see the pool of buyers today kind of in three buckets. There's the buyers who were hurt and burned by the last couple of years. They wrote 5, 10, 15 offers and lost out to bidding wars. They're pissed off and they're out of the market. Maybe they're coming back. I see first-time home buyers who are just they don't know the nuttiness of 2022, but they're seeing rates fall and maybe this is their time to get in. And then the third bucket is just investors, right? We're just trying to look at the cost of capital, trying to generate cash flow and try to find great deals. When you're talking to people today who are putting in applications, what is the rough percentage? People that were burned by 2022 coming back, first time, no context of 2022, and then investors.
That's a good question. I think if I were to guess, first time home buyers, maybe, because of how I operate my business and some of the referral partners I have are a pretty big chunk of it, right? Like
Okay.
first time home buyers probably make up half of the clients I'm working with. And
Oh,
then,
nice.
maybe a third overall are investors. And then, you know what I get a lot of recently, and I think it's interesting. I try to lead with referral partners or anybody with, I want to help you and educate you and help you figure this out, whether we work together or not.
Mhm.
And so I'm getting a lot of, I just want to see. I'm not sure if it makes sense. And the cool part for me is when you have those conversations, a lot of times the consumer doesn't know and I don't know either, right? Let's
Right.
look at, because you own a property that's worth 750 and you only owe 120, you've got options.
Yeah.
You're
Got
going to
options.
net $580,000 or whatever the number is. What does that look like if you buy something for $1 million and you move to that neighborhood and you finance, 420 at 5.99%?
Right.
Or, there's so many different ways to go about it. And so there's a lot of those people out there, I think, Mike, that are sitting on mounds of equity. And, for every person like that who's got tons of options and can probably do something that would really upgrade their, neighborhood or lifestyle, or it fit better. There's those people that don't know because they haven't had the conversation. And then there's people that bought in 2022. They've got $9,000 in equity and they
Yeah.
want to go buy triple the house, and they're just disillusional in that way. So I think, like, the moral of the story is you don't know until you talk to somebody. And so if there's a thought and you've got real estate goals, the best thing is to talk to somebody and do the numbers. I'm having more and more conversations, and it was a great compliment I was paid. This guy called me and said, "Listen, Matt, like, I'm in sales. I hate to be sold.
Mm.
I was referred to you, and Kyle told me that you're just a straight shooter." And so me and him were talking, and I can't help it, man. If you ask me about down payment assistance, I'm going to give you my honest feedback. If you ask me about some of these crazy equity share BS programs that are out there, I'm going to tell you what I feel about them, right? And whether that helps or hurts my sales numbers never matters to me, right? I just
Right.
want to give somebody advice that's like, hey, I'm reaching out to you as a friend. I want your honest advice. And so that's probably just a public service announcement to people that a lot of times, for whatever reason, consumers like have something in their head, or they heard something, or they thought something, and they never think to check, and they never think,
Right.
because like that person with 600 grand in equity, like there's a ton of stuff they can do. And maybe they've sat in the house they hate, that's too small for their needs, that's 55 miles from their grandkids. And it's like, you could upgrade. I mean, maybe we determine you want to downgrade and buy something cash and have no mortgage, right?
Yeah,
It might
maybe.
not have anything to do with me, but if you don't have the conversation, you don't know.
Yeah. Oh, I'd be remiss if we didn't talk about refis. Again, I'm on public record thinking there's a lot of mortgage call centers that are doing people dirty. I hate it. It makes me feel bad when people give up an asset and really turn something into a liability. Again, refis have been up over 100%. They are coming off a small number, but still they're up, and they're taking the mortgage industry out of a depression, is
For
where we're
sure,
going.
for sure.
I saw a
A lot.
report.
Oh, go ahead. Go ahead. Sorry.
I was going to say, I saw a report on Bloomberg that as rates get closer to 6%, it unlocks upwards of 4 million people that could benefit from a refi, let alone the people that might look at credit consolidation or, a school or whatever. So
Right.
again, I think
Yeah.
refis only go up from here.
Oh, 100%. Yeah, I saw a stat that was like, 6.5, 6%, and 5.5. Each one of those unlocked 2 million more people,
Yeah.
per bucket that
Yep.
were in the money. And like you said, that's an in the money rate in term refi, not to mention 60,000 in credit card debt, other issues. A couple
Yep.
things I want to say to people looking to refinance. If you bought your house in the last 2.5 years, you should take a look. If you've got a
Yeah,
rate of
probably.
7% or higher, you should. So many scenarios are so different that it's hard to give blanket advice. I'm looking at a deal this morning. They've got a 7.3 and they owe $1.1 million. It's really easy to see $1,000 savings
Yeah,
on $1 million loan. Some
for
people
sure.
might have an 8%, but they only owe 122, and that doesn't make any sense to refinance,
No.
right?
Yeah.
And so, you know, don't be talked into it from a salesperson, but also don't talk yourself out of a refi. I was looking at a chart, Mike, because I used you as an example, and I told somebody, I said, hey, I was talking to a smart friend. Me and him kind of agree. Rates aren't going to, go down a lot by the end of the year. It might be a really slow ride down. We might stay flat for 4 months. And,
Absolutely.
so I'm thinking about these people where it makes sense. You're going to go from 7.3 to 6.3 or whatever the numbers are for the refinance scenario you're looking at. I don't know. I'm going to hold off. Back in, Q4 of 23,
Okay.
rates went up and touched 8%.
They did.
So in a scenario where somebody has one of those mortgages and they see rates, they bought in October and they see rates towards the beginning of the year down in the mid sixes. I'm like looking at a rate chart right now.
Mm-hmm.
They've seen this downward trajectory. Okay, we're going to wait because it's going to go down to 6, down to 5.5. Between January at like 6.6, it took until August until rates came back below that. 8
Yeah.
months. of a slow and steady, kind of equal, a little bit up. And so don't be surprised if you wake up in January and rates are the same that they are today or
Yeah.
slightly high.
Yeah.
And,
It could happen. Absolutely could
so
happen.
if you've got a refinance scenario that saves you $450 a month, for every month you don't do it, you're throwing $450 into the wind in extra interest you shouldn't be paying to somebody. Now, that's not a sales pitch, but if you're waiting for an extra $32 in savings, and so
Yeah.
you pay an extra $1,800 in the meantime, like that's your bad. You just have to
No.
make sure that the deal makes sense today. I've actually got one right now, Mike, where great client. We looked at break even analysis. Because of the appraised value, we fell into a different LTV bucket and the price changed.
Oh, of course.
And savvy, great client that, we're going to have the conversation. I think we went from a 13-month break even to an 18 or 20. It's up to him, right? If he wants to proceed, but these are the conversations. Those are the type of things you want to look at versus what most people do. What's my new rate? What's my new payment?
Right.
All the other stuff doesn't matter. That's why Rocket Mortgage is so good at plugging 22 grand in cost in there for you.
Yeah. Folks, at the end of the day, if you have an asset, you've got a 2, 3, 4% mortgage, and you're thinking about refi and doing this or that, do me a favor, at least have somebody that the channel know, trusts, and respects look at it, see if it makes sense. Because again, there are lots of situations where it makes sense. Unfortunately, there are lots of situations where people are being sold a bill of goods. If somebody wanted to reach out, get something started, get a review, how do they do that, Matt?
Go to greatmortgagebroker.com. Quick and easy form, greatmortgagebroker.com. We'll be in touch. If you want to email me, if you're one rental at a time and you email matt@mtmg.com, I'll get back to you. Sometimes those get lost in the fray, so I won't be offended if you send me 2 emails, but either one works. Greatmortgagebroker.com, quick form, or matt@mtmg.com.
You're great. Thank you, buddy.
Thanks, Mike.